It has to do with U.S. politics, and of course, being the world's largest economy, it will impact countries across the world. Now, what seems to be a major blow to U.S. President Barack Obama, the Republicans seem to have achieved a majority in the Senate, breaching the halfway mark by winning a total of 52 seats. The Republicans will now control both houses of Congress during President Obama's final 2 years in the White House. How will this impact U.S. policy making? We've got with you a geopolitical expert, Alastair, Managing Director and Senior Political Analyst of Nomura International, joining us on the line. Alastair, good afternoon to you. Thank you very much for joining us, and talk us through what you think the implications will be of this Republican control over both houses.
Well, good afternoon, everybody, and thank you. First of all, let's be clear on one thing. The Republicans will have control of both houses, but they will not have a super majority in the Senate. So they will need Democrat support to push through any legislation commensurate with their policy objectives. The optimists are nevertheless saying that what they hope to see is that the President and Congress will work together, and maybe we will see a few contentious issues in the U.S. Resolved in the coming 2 years. I have to say that, frankly, I am less optimistic. There is a lively faction in the Republican Party, particularly on the right of the party, the Tea Party, which is very averse indeed to doing any deals with President Obama. So I do think we are, on balance, likely to continue to see domestic gridlock in the U.S. over a whole swathe of issues, even though the leadership of the Republican Party is very keen to show the American electorate that it is competent to govern, with an eye to the 2016 presidential elections, for which campaigning effectively begins tomorrow. Goodness me, 2 years ahead of the election. So that's the big picture. Obviously, there are some detailed issues, particularly of interest to markets, both in domestic policy and overseas policy, which we can go into if you wish.
We would like to go into that, and to get into that, Alastair, let me start by putting a question to you specifically on the primary concern that impacts global markets, and that is Fed policy. Now, of course, the Fed is an independent institution, but do you expect that a Republican majority, not supermajority, majority, could potentially influence or put more pressure on the Fed to withdraw from its easing policies earlier than anticipated at all?
Well, certainly there are individuals in the Republican Party who will wish to put pressure on the Fed, but I don't think markets need to be particularly concerned about that. I think in the world of finance and budgets, the two things which markets need to pay most attention to are the possibility that a Republican-dominated Congress may be able to water down some of the provisions in the Dodd-Frank legislation, although I would expect Obama to resist that very strongly, given that he sees it as one of his flagship achievements. And secondly, let's keep in mind that at the end of March, April, we are going to potentially run into another debt ceiling period. And there may well be another deep partisan fight over increasing the debt ceiling, similar to the one we saw around this time last year. I'm not suggesting that America is going to default, but you may recall that last year markets were completely hypnotized by debt ceiling shenanigans in Washington, and a rampant and enthusiastic Republican right may wish to push that issue again.
All right, debt ceiling deadlocks, we've now gotten a wee bit used to, Alastair, if I may say that, from a global point of view. What specific policy making, then, do you think will be most impacted by this Republican majority? For instance, energy policy or tax reform. Do you see big moves take place here, big enough to rattle global markets in any fashion?
I still think tax reform is a very big call indeed. I think it's going to be very difficult to get agreement on that. I would put it down as a very small probability indeed. But I do think energy policy is potentially much more interesting. Obama put off consideration of the Keystone XL pipeline yet again at the request of Democrat candidates in the run-up to the midterm elections. That is clearly going to come back on the agenda. At the same time, I expect the Republican leadership particularly Lisa Murkowski, Senator for Alaska, who is expected to be the new chair of the Senate Energy Committee, to press very hard on freeing up shackles which restrict American exports of hydrocarbons, particularly gas. I think the president is going to come under significant pressure to speed up the licensing of LNG facilities, and there will be a push in some sections of the Republican Party, at least, to lift restrictions on exports of crude. Given what we've seen in oil markets in the last 3 months or so, over a period, this clearly has significant potential impact on energy prices worldwide. And we'll see what happens over that. Now, there will be resistance to this. We should be in no doubt about it, including from the Democrat Party and within the Republican Party. This is one issue for markets to follow very closely, in my view. It could go either way.
But if it does go the way of opening up exports of both LNG and crude, that would underpin the weakness in the crude markets even further on from here.
It would, but let's keep in mind that this is not going to be something which happens between now and a few weeks from now.
Sure.
It takes time to build the facilities. Lifting, if the ban on exports of crude oil were lifted, that could have quite a speedy impact, though, bearing in mind how American crude production has gone up by around about 3.94 million barrels a day over the last 6 years or so, which is more than any OPEC member today produces other than Saudi Arabia. Now, a lot of that is being turned into petroleum products and exported as petroleum products. Exported as crude, it would have a significant impact on global oil prices.
Alastair, the third issue I did want to bring up in our conversation had to do with immigration reform. The Republican position on immigration reform, a couple of bills that they've attempted to get through both houses in the recent past have rattled the Indian IT industry considerably. This is one area we'll be watching very closely. Have you sort of any insight into what may take place now that they do have a majority?
I'm afraid I think this is going to be an issue which is going to remain deadlocked. I don't see any significant prospect of serious movements on immigration. Now, let's be clear what we're talking about here. We are not really talking about immigration reform as such at all. What we've been talking about in Washington for the past many months has been some sort of amnesty for existing immigrants rather than a wholesale reform of U.S. immigration law. So anything which was done would, in my view, be pretty much at the margin of the big issues about immigration in the U.S. today. It may be that Obama decides that he wants to do something unilaterally over this. We may see an executive order. I think that Obama is going to remain largely focused on domestic policy in any case. Executive orders are something he has shown a propensity to resort to. Those will be resisted very strongly by a Republican majority on the Hill.
So essentially what you're indicating to us is don't expect too much big change despite this taking control of both houses by the Republicans. Expect more deadlock kind of politics. And yet we've got the dollar zipping up today. So if you take a look at the dollar index, it's moved above 87 in trade today on the back of this news, early news coming in on some of the seat leads. So curious to know how you think markets will respond to your analysis.
Yeah, short term, this is clearly a market positive. We already have momentum behind the dollar, have had momentum behind the dollar for some weeks now. I think the big announcement from the BOJ last week, coupled with GPIF's confirmation, it was well trailed before the formal announcement, that it was going to be moving into S&P significantly, has all been dollar positive. Our equity strategists are predicting a continuing S&P rally into the year end. The classic pattern in midterm elections in a presidential second term, that thereafter it tends to be a good period for U.S. equities. Let's keep in mind, though, of course, S&P already at record highs. There are a lot of commentators out there who are concerned, how long can this last? And what the Fed does will clearly have some impact on sentiment over U.S. Stock market valuations going forward too. But overall, yes, the news from Washington this morning, from the US this morning, is a positive for market sentiment.
Okay, so, sorry, go ahead.
You did touch upon the Bank of Japan announcement on 31st October that underlined the fact that difficult to predict monetary policy, maybe as difficult to predict monetary policy as it is to predict political events. What other surprises do you expect from monetary policy going forward?
I'm not sure that I do expect many surprises, to be quite honest with you. The situation in Europe with the ECB is very unclear. My personal view, and I would stress that this is a personal view, there are a number of views within our House on what the ECB is going to do, is if Mario Draghi is going to go to QE, it will be as a last resort and probably not until at some point in 2015. I do expect him to do a little bit more with TLTRO this week. I think that is consistent with our House view. But that would not be a surprise, frankly. I think in some respects the surprise for markets, or at least some market participants, would be that if the ECB does not go into QE rather than going into the area of quantitative easing, clearly Europe's economic performance is increasingly worrying. There is a lot of concern out there that Europe is becoming the new Japan, so to speak. For emerging markets, I think this is going to be quite a difficult time as the Fed's tapering program is now wrapped up. Emerging markets which have better policy frameworks, both in terms of what central banks are up to and what governments are up to, I think will continue to perform well. And in that respect, I think India has got a very, very strong story to tell. As you know, we at Nomura are big fans of the RBI. We recall very well that 14 months ago, Dr. Rajan turned round sentiment over rupee before we even got into the regional election cycle in October, November, December, and then, of course, the general election, which saw what was for markets a very positive result indeed. So I do expect India to continue to do well despite the uncertainties globally over monetary policy going forward.
All right, Alastair, on that note, thank you very much for joining us today, and thank you very much for talking us through what you think the implications of U.S. politics will be. Alastair Newton there, talking you through a variety of issues, not just U.S. politics, but crude prices and central bank policy.